meeting to order, the Virginia Public Utilities, on Wednesday, May 27th, 2026 at 3:30 PM. No need to do roll call, everybody is present. So I need a motion to approve meeting agenda.
I'll do it.
Is there support?
Support.
Okay, discussion. Be none, all those in favor say aye.
Aye.
Motion carries unanimously. We move to number 4, consent agenda. I need a motion to approve resolution number 5381, which is approval of payroll, accounts payable, net payment adjustments, along with B, approval of regular commission meeting minutes from the April 27, 2026 meeting.
Chair? Madam Chair?
Yes.
It's public forum is for the consent agenda.
Yeah,
And-
we got he's the auditor.
Yeah.
So we'll have him later down when we accept the audit.
Oh, okay.
That's
All
right.
right,
As
okay.
non-public as possible, so.
Okay, all right.
When we accept the,
If he's
okay.
gotta be, we have to be on camera, so does he.
Yeah,
but that's a-
No, I'm just saying like this, I think.
That's a good catch. Okay, is there a motion to approve? Is there support?
I'll support.
Okay, discussion. Being none, all those in favor say aye.
Aye.
Motion carries unanimously.
I just had one question. I thought I saw something on the elevator again.
Yeah, something for what?
Which elevator?
Oh, there's more than one.
There's one in the plant and one here.
Oh, I don't know which one. I thought I kept thinking to myself, geez, that elevator's getting to be a troublesome.
Well, you have to do annual maintenance on it.
It was-
That's required.
Well, I know,
Yeah,
but it seems like it pops up a lot.
okay.
But I didn't know there was more than one, so I thought it was this one.
We
No.
pay it quarterly, so
Quarterly
yes.
inspection? Yeah.
Oh,
They're not cheap, I can.
No.
oh,
No, they are
No, they
cheap.
aren't. I don't care what firm you get in here, they're not.
And we have them in the falls, and just the trip charge alone is unbelievable.
But they're required, so.
They are.
Okay, we go to number 5, reports to committees. Nothing on the monthly summer injury report, nothing there, so that's great news. So we jump to old business, A, distribution center update. Aaron, I'm gonna turn over to you.
Yep, so our building delivered finally on May 6th. Everything went very well. Our slab and all pipe conduit coming up off the slab lined up perfectly with where it needed to be. Our engineer and I went through and we came up with a punch list of items to go back to states. They either have to send somebody up here or hire local contractors to work through the punch list that we gave them. Along with there was I think 6 different skids of equipment that they still need to install in there. That wasn't, most of it is battery banks and stuff for battery backup and things like that. But and once all of that is done, yeah, our line crew will start tying everything in and getting everything hooked up. Our goal is to have it online by the end of September.
Good.
you're feeling pretty good to rolling along.
I think so, and we have all the materials that we need here as far as we know.
Oh,
Unless something comes up that we don't have, there's some tooling that we need to buy yet, but to buy the tooling for our line crew to do it versus having a contractor come in and do it is just a fraction of that cost. So we're gonna go that route because we originally planned to hire some of it out, but pretty much every electrical contractor on the Iron Range is tied up out at Mesabi Metallics, and we don't know how soon we'll be able to get them here. So our line crew said they are happy to take that work on as long as we buy the tooling for them to do it. So we're gonna go that route.
But all the major components are here on site.
Yep.
Great.
Yep, all the cable, all the terminations, all the elbows, everything should be here to get it hooked up.
Wow, that's great to me. Any other questions for Aaron on that?
No.
Okay,
It's
thank
nice-
you.
It's nice it finally showed.
Yeah, yeah, 6 months late, but it's better late than never, I guess.
Yes, it is.
Yeah. Okay, let's move to number 7, new business I need a motion to approve 2025 audit report.
Are we gonna-
Is there a motion?
I make it, but is he going to?
Yeah, he's gonna.
Okay, I'll make it.
Okay, so support.
I'll support it.
Okay, now discussion.
Okay, thank you, Chair. So yeah, familiar faces here, but my name's Tom Kelly, for the camera too, I guess. Presenting the 2025 audit. When were we here, Cassie? We started this end of March or something like that,
Yes.
and got it wrapped up a couple weeks ago. So, I'm gonna give my presentation. I like the informal kind of presentation, if you remember. Discussion, I think, is how we get the most out of this, rather than listening to me drone on. Of course, if there are no questions or comments, that's fine, but I just think that that's most beneficial. Cassie, hop in if I misspeak, have anything to add, same with everybody else, so. Don't worry, I'm not gonna go through all, my PDF is 52 pages, I'm not gonna go through all that, I'm just gonna hit what I think are the high points. But that doesn't mean that if there's questions on other areas, please ask those too, so. Okay, so I'll get started. Page 2 of the audit. Pages 2 through 4 is where we give our opinion on your financial statements. So the whole goal of the audit is for us to formulate an opinion on your financial statements and related notes. Of course, we gotta have 3 pages in here to do that, but really it can be all summed up by the second paragraph on that page 2, where we say, in our opinion, the accompanying financial statements referred to above present fairly in all material respects financial position of the Department of Public Utilities of the City of Virginia as of December 31st, 2025, et cetera, et cetera. So that's what we call a clean opinion, technically an unmodified opinion. That's the highest level of assurance you can get. That's the same opinion that you've gotten for years, forever, essentially. That's what you're looking for. It's not a judgment on the health of an entity, but rather the usefulness and fairly statedness of the numbers. So basically the numbers are good, and Cassie does a fantastic job with that, so we don't have to do a whole lot of cleanup here with that.
So you will be commenting on the health?
Yes, we will be talking about that. Don't worry.
I'm assuming it's healthy. but-
Yeah, it is. But that's the whole goal of what we're here for. We give our opinion, and then, that's,
Okay.
so that's good news. Books are in good shape. We do flip to page 5 now, which is the statement of net position, which would be the balance sheet in a for-profit entity. And I'm just gonna hit on what I think are the high points here. So cash and cash equivalents, I always like to talk about cash. They went down about 2.4 million or 16% from 24 to 25. Keep in mind this is calendar year end. So they were just north of 15 million at the end of 24. That's versus 12.6 at the end of 25. The major driver in that is the purchase of fixed assets. Cash went down 2.4 million. You purchased exactly 2.4 million in fixed assets during the year. So non-operating expenses or cash decrease essentially is what attributed primarily to that cash decrease. It was the same sort of thing that happened last year when you had cash decrease as well. There's also significant capital asset expenditures during the year. So still a healthy balance at 12.6 million at the end of the year. Accounts receivable. Bigger numbers on the balance sheet, not too exciting though. They didn't change too much. They both, customer services receivables and unbilled revenue receivables both went up slightly from the prior year. And then we get to conversion loans receivable, where we have the current portion due within 1 year up at the top. That went from a balance of 896,000 owed to the department at the end of 24, increased to 918,000 owed to the department at the end of 25. And I'm gonna hop to the middle of the page here. The non-current, so due in more than 1 year conversion loans receivable, also increased at a greater amount from 8.4 million owed to you at the end of 24 to 9.1 at the end of 25. So essentially what that means is that you've issued more of those conversion loans during the year then principal payments have been received. So you issue the loan, it increases those balances. You receive principal payments back, it decreases those balances. Also aids in the cash flow going down. Overall, total current assets went down correlated with the cash change about 2 million or 10.3% from 19.7 to 17.7. Then we'll hop down to total assets. Those went down from 70 million, which you will not see on this page, to 68.5 million. That's the fourth to last number on the page. 1.5 million, but it's really only like a 2% decrease when you're talking significant numbers like that. So relatively speaking, like if I'm casually speaking to Cassie, I'm like, well, that's no change. That's not much difference there. So, any questions on page 5 before we continue?
Just a comment,
Sure.
every year you'll hear it,
Sounds good, Gary.
less accumulated depreciation.
Yes, I remember this one last year.
That is just a huge number.
It is. And you have a significant amount of capital assets, and that's why that number is so big. So when you purchase fixed assets, you do a project, you do a renovation, whatever it might be, that is cash leaving your bank account, right? But it's not an expense in your financial statements. It's an addition to capital assets. It's land, construction in progress, improvements, etc. All those things you see above accumulated depreciation. So when the cash leaves, it's not an expense. To account for the expense related to those fixed asset, capital asset purchases, you depreciate them over time. And they're all given a life. Like a truck, a standard life is like 7 years. A building might be 30, might be 35, might be 50. And that cost is taken and divvied up based on the estimated life, and depreciation expenses recorded during the year. And the other side of that entry is accumulated depreciation. So that is the capital assets that are on the books. That is the accumulated depreciation over time, estimated based on the useful lives of all of them. And when you get rid of a fixed asset or capital asset, that goes away, just like the cost does above that.
What will happen
That was
to this number as we deconstruct the old unusable parts of the utility? Will that number be adjusted?
It should go down. I don't know how much of that total amount is attributed to that. Maybe Cassie does, but that's kind of a hard one off the cuff.
Not off the top of my head, because we've got plant improvements that hit that, which will be going away, and then we've got everything in steam. Part of it's gonna go away, part of it will be reallocated to other funds, so we'll do an asset impairment when we get on the other side of the conversion.
And then those would be trued up essentially, the cost, the improvements, and then the accumulated depreciation. Once they're disposed of, they both go.
Just for clarity, we're doing everything full accrual.
Correct.
Okay.
Correct, whereas you're an enterprise, so you are full accrual. Whereas a lot of other local governments, if you listen to city council meetings or attend them, they're not all full accrual because of the accounting rules.
They're doing modified accrual.
You got it.
Thank you.
Yeah, of course.
As you can tell, it's a burr in my saddle.
Well,
But I appreciate the detail that the two of you do with the other people to get it to where it is. I mean, there's a lot involved.
yeah, you have significant dollars in there. So if you look at it, the total non-current assets is 50 million. 95 is negative, but being accumulated depreciation, so that means my math is right. Oh no, I'm adding something else, the conversion loans are in there too. Basically, you've got a little less than 150 million in cost in fixed capital assets. I mean, that's what it takes to do
Yeah.
the enterprise that you're doing, you know? So you're right, it is significant numbers in there, but, it's all reasonable from our standpoint.
I know we were setting the cost to the consumer. We were factoring in depreciation, and the one that they were, a couple of years ago, we were trying to catch the water depreciation. We had enough money for revenue and operations for expenses, but we were a little low on the depreciation, and the goal was to get it where it was supposed to be.
Yeah, and that's a good plan, because we'd always recommend that you fund your depreciation, even though it's not cash expense. You're gonna have to incur those costs at some point in time to replace items, so. Yeah, it's a good train of thought.
Well, thank you for,
Yeah, of course. Thanks for asking the question. Okay, so we'll go to page 6 then. And we're just gonna hit the total amounts here. Current liabilities, those are virtually identical to prior year. They were 3.8 million at the end of 24 versus 4 million, just north of 4 million at the end of 25. Non-current liabilities, those saw a decrease. The water tank maintenance agreement, as that's being paid down, that liability is slowly disappearing. The pension liability and OPEB also decreased. That's 2 years in a row of decent sized decreases to, comparing 23 to 24 and 24 to 25. Total non-current liabilities went from 10.6 million to 8.7. Total liabilities went from 15 million to 13.5 million. That's about 3/4 of the way down the page. So that's, as liabilities get paid off, that also can factor in with the cash flow as well. Cassie, am I missing anything there? Okay. Total net position, which is basically assets less liabilities, is the bottom number on this page. That's your equity in a for-profit world. You were at 52.6 million at the end of 24. That's versus 53.5 million at the end of 25, so about a $900,000 increase, which we will show how we got there on the next page, which is the statement of revenues, expenses, and changes in that position. Casually coined the income statement, but as it is in the for-profit world. Starting at the top, operating revenues, you saw increases in all those except for steam, which is expected as you convert customers away from steam. Of course, the revenues are gonna go away as well. Overall, total operating revenues went from 19.3 million in 24 to the 20.6 million that you're looking at right there. That's a 6.7% increase. So as much as steam is, dissipating, no pun intended, or maybe it was, the other revenues are increasing too. So,
That's what we like to see, yeah.
right. Continuing into the operating expenses, commodity costs are your biggest line item there, the very top one, 10.6 million. That increased from 9.6 million, which is expected when volume goes up and sales go up in, your industry. So the more you sell, the more the cost is gonna be to produce electric, water, gas, etc. Salaries, as you've had staff changes, went down significantly from 3.8 million to 3.3 million. So you saw about $500,000 in savings in changes in salaries expense from 24 to 25. So, continuing on, Gary, that depreciation, that was about the same as prior year. The very last operating expense line item, 2.3 million versus 2.35. And then total operating expenses increased from 20.2 million to 20.7 million, which you see the 20.7 there, and that's a 2.4% increase. So your increase in revenues did outweigh your increase in expenses there. It's important to remember that that's not all cash. There's other factors that play a role in that, but at the end of the day, your operating expenses outweighed your operating revenues, by the 146,661 you see almost smack in the middle of the page there. That's a negative. That's an improvement from the 931,000 negative in 2024. That's purely looking at operating. So just your cost of doing business essentially and your revenues coming in from doing business. You're not operating, brought in, this is now, interest expense, which is decreasing it, interest income, insurance proceeds, was just north of 1 million. Non-operating revenues and expenses netted for the year. You see that the big drivers in that is the interest income and insurance proceeds, which I think, as we all know, are not things that you can always rely upon. So that helped the health of the department as well. At the end of the day then, the third to last number you see, change in that position, is a positive 868,000. That's rounded down from the 9 that I gave on the prior page as a change. That's versus a decrease of 101,000 in 2024. And if those two bottom numbers look and sound familiar, the 52.6 and the 53.4, good. That means that you retain that from the prior page because the 53.4 is the bottom number on the prior page as well. That's your total equity at the end of the day. Any questions there? Okay. We're gonna skip the next couple pages, statements of cash flows. The biggest section in the audit, I don't have any plans to stop here unless anybody's got any questions, is the notes to the financial statements. Those go from pages 10 to 28. They cover your accounting policies and what makes up your cash, and goes into some detail on fixed assets, long-term debt. There's about 8 pages on net pension liability and OPEB and all sorts of fun stuff in there. If anybody's got any questions on any of that, we can stop. Yeah, of course.
Before we go on into the notes, back to page 6 for a minute.
Mm-hmm.
I found, maybe I'm on the wrong page, where we had the unrestricted in the balance.
Mm-hmm.
And then the rest is for assets, but that unrestricted,
Mm-hmm.
is that, can we use that, take the assumption that's working capital?
Essentially, yes.
No, I won't get into cities and counties here, but when you bill monthly and the fund balance policy through the state auditor, something like we do, you'd probably be looking at, we wanna have 2 months on hand to cover cases of failure somewhere in our billing system or payments.
Mm-hmm.
So does that number seem adequate?
So, yeah, I mean, I think how you're describing it is kind of melding the governmental outlook where like a city might look at something versus a full-blown enterprise fund. I mean, if you look at, you did 20 million in sales, you had 20 million in operating expenses, and you've got 13 to 14 in unrestricted equity in that position. So for the state auditor's office is not as direct with recommendations for enterprise funds, but for like a local government, they would recommend at a minimum 5 months of operating expense. So let's say if you are taking that position to look at it that way, which is fine, you'd have about 2/3 of a year, so probably 8 months worth there with that 13 to 14 million versus the 20 million in revenues. So if something happened and you lost a few months of revenues, you do have that banked up in an unrestricted net position. So I think that's a good question.
Well, the reason I've asked is because I've been involved with communities where things happen,
Mm-hmm.
call it life happens.
Mm-hmm.
And it's important to have enough to carry you through while you have time to sort out what's the best path forward, and it might be more than one path. And the normal thing you read about for-profit, and it's been in the paper, Star, quite a bit about people getting laid off because the money wasn't there. I haven't asked that before, and it dawned on me it might be a good time to bring it up so everybody has an idea.
No, that's a really good question, and I would say you're in good shape based on that. You know, you look at your cash balance too, because cash is important. I mean, what if your customers just something happened and they're not gonna pay you? Well, that's important to know how much cash you have too. And your cash is 12.6 million at the end of the year. Your unrestricted equity is 13.7, so it's almost identical. That's where I say even though you had decreases in cash, you're still strong in your cash balances right now, or, you know, as of 5 months ago, whatever it was, so.
Thank you for that too, because I think if we need to know.
Yeah, no, that's a good question. Did you have-
Hence, we're healthy.
Yes, yep,
Okay, all right.
yeah, exactly, yep, no, good shape,
That's what you want.
Yeah.
yep. Okay, so I'm not gonna stop anywhere in the notes unless anybody wants to. I know Cassie has these memorized front, back, upside down, whatever, but, so we'll go to page 42. This is the schedule of findings and responses. And we have 3 findings, they're the same findings essentially as last year. 2 are very standard, virtually all of our local governments have the segregation of duties and lack of control over financial reporting process. So I'll explain those. Segregation of duties, we have a small office. It's very hard to segregate duties the way that, as an auditor, we look at it, we want that done. It's not saying you're not doing a good job with it. It's just saying, we're just saying, we need to do our job to bring it to your attention, like, hey, you got a small office, you can't split everything up the way that we would ideally like to see it. It's not saying you're not doing a good job with what you have, but, we're just doing our due diligence in reporting that to you, essentially. Second one, on a similar note, I try to only read the opinion from the, word for word from here, but if you read under the criterion condition, it says, as a part of the audit, management requested that the auditor prepare a draft of the department's financial statements, et cetera, et cetera, et cetera. In a perfect world, like let's say that we're Deloitte or Ernst & Young, one of those massive worldwide firms, and you're 3M or Target Corp, some Fortune 500 company in the Twin Cities. We come in and this whole report is put together with the notes cover to cover besides first 3 pages and the last however many. And that's what we do, is we just check the numbers. Well, that's not generally how it works when you're auditing local government. You rely on us to put this together because we do it for how many other local governments. I mean, so it's kind of our specialty, our expertise. It's what you hire us to do as well. However, that still is not the way that the full audit world wants to see it done. So we have to put this in there to communicate to you, cover our rears, state auditor wants to see that, et cetera, et cetera. But it's not like there's anything wrong going on. It's just, you have us put the report together. It makes sense. You'd rather have Cassie doing other things. Most of your days are pretty busy, I think, so. Yeah. So, anywho. And then the third one, contracting bid laws. There was a payment made towards the end of the year that was before all the compliance forms and paperwork were filled out. Similar situation to last year. You know, we talked about it. Yeah. We'll see it get cleaned up again. We're not worried about it continuously happening or anything like that. I get that it was a couple of years in a row. This comes from, we have these large checklists. It's not part of the numbers part of the audit, it's compliance testing. And the state auditor has all these statutory requirements that we have to come in and test. And basically there's a yes column and a no column. There's no like, well, can I scribble in the middle here? And so that was the situation with this one. I mean, if there's any questions, we can answer.
But it was corrected.
It was corrected, yeah, in
Yeah,
fact, we
it's-
even put that in here, that it should be
Yes.
noted that the department did obtain the
Proper.
proper confirmation.
You know, the IC 134 is like the final document. That proves what's happened.
It
You
basically,
really need the IC 134.
it covers your rear end for liability purposes, and that's why that requirement's in there for a third party like us to come in and test it.
And I mean, like you said, there's a large checklist. That's something that you're so busy doing all the rest, you can overlook it. But that's the big final close form.
Right.
And I wanted to do a thank you to our finance people because we get monthly reports and year end, and we get the balance sheets, and we get the revenue and expenditures and so on. And I know as a commissioner, it really helps keep me in tune because it's basically this on a monthly basis. I mean, we're working towards it,
Mhm.
and I find it very useful. And I
Right.
thank them for that.
Well, I think, how many adjustments do we have this year?
How many times?
I don't, it's more, if there's one, she's not happy about it, but we always just make a few. But the books are in really good shape. I mean, you're getting reliable statements monthly that Cassie's producing.
Yes.
I mean, I say that with full confidence. Of course, there's always gonna be some tweaking, that's why you have an audit. But for all intents and purposes, yeah, the monthly reports you're getting are good. Yep. So those are the findings, and then the management letter is the last 2 pages, which, there's one management point, might sound familiar to some of you. It's the employee, fund that's in the departments, under the department's EIN number. I mean, this one's been in here since I started in 2010, I think. So, you're aware of it, we're just doing our job to keep you aware of it, like, yeah, probably not best practice to do that. So, I know that we have kind of casually talked about changing that, but, if that's your only management point, I think that's a good sign too.
In the whole scheme of things.
Yeah. Yeah.
Yeah.
You gotta find something, that's what you hired us for,
Okay, you wanna sum it up then, I guess?
Yeah, you're financially in good shape, you got the highest level of assurance opinion that you can get, and, items to correct are as far as, well, I guess number-wise, there was nothing numbers-wise as far as management points or recommendations. The other things are minimal, and, yeah, so that's it.
Any other questions?
Just a comment, the segregation of duties and so on, you look at what's involved in getting to this and the work that's done. We don't have much staff, so it's impressive that the quality of work is here.
I agree, it's a really, really well done. I'm not just saying that, like, it is, yeah, Cassie does a fantastic job, and she has for a long time, so.
And I'm glad you're having come and give us a chance to talk and explore. And once in a while, we trip into something we don't realize. And I thank you for
Yeah, of
coming.
course.
It helps us all.
Any other questions?
I don't have a question, I just have another comment too. I can't help but think that the numbers are gonna change, not so much the last 2 months of this year when the steam gets shut off, but next year, the numbers showing up for that. Also, the fact that we budgeted for city street projects this year, and then they scrapped them all, they're not gonna do any, so that money's gonna stay right where it is. I can honestly see expenses going down on the steam end of it. So we won't be producing anymore at a loss.
Right.
And and the citizens that purchase our utilities subsidizing it. So
I
the
was
numbers are
just-
gonna change, there's no doubt.
I was gonna add,
See that.
if you look at page 38, that steam loss, again, $3.5 million
Right.
for 2025. So
Yes.
I think we're on the right track with shutting down that.
Oh,
plant.
Oh,
definitely.
definitely.
So,
There's no doubt in my mind.
No, that's a great point, when you look at that versus the 846 in revenues,
Yeah, that's
There
just,
was
doesn't make
Yeah.
sense. Yeah, it just doesn't add up.
Jim, you have any questions?
No, hats off to Cassie and her team, great job.
Yes.
It
Thanks
is-
very much.
It's certainly
Tom,
reassuring
thanks
to
for
hear that.
Thanks for
Yes.
doing what you've done there.
Yeah, for commission, thank you very
yeah,
much.
thanks for having me, this is whole part of the deal, glad to help, and like I say. you guys are-
Cassie,
pleasure to work
monumental
with.
task putting this together. I know,
thank you.
you were shorthanded.
Yeah.
Yeah,
it was a crazy winter, but
Yeah.
we're through it now, so.
Okay.
Alright, thanks everybody.
Well, thank
Welcome,
you,
you,
sir.
Tom.
Next up.
Okay, now we have a motion to accept and we have support. All those in favor say aye.
Aye.
Okay, motion carries unanimously. Okay, we move to number 8, manager staff report, Cassie operations update.
Well, we've got one boiler running right now, 28,000 pounds. Nice weather's finally here, right?
Be fine. Yeah,
We will be starting a water leak survey in June, working diligently to get those water losses down, so. We've got that going on. The only other thing then is a conversion update. There's about 35 properties that we have not received applications for natural gas from. So letters were sent out to those specific 35 this month, telling them now is the time. And Jeff and I had a discussion about looking at certified letters and sending those out to people. And then we're also gonna be doing another round of phone calls to anybody who has not completed the conversion at this point.
okay, and the major conversions are happening. Maybe you gotta give an update on that.
Haven't really got a lot to update. There's still a lot of larger customers that we haven't heard from at this point.
Well, like I said, those certified letters, you get a signature, they have to acknowledge that they received it, so.
Do you need a motion for that?
I don't think we should need a motion for that.
Okay,
We're gonna do the phone calls next anyway, so
okay.
we'll talk to Greg, and if he wants to do a motion, you can put it on the next one.
Thank you.
Thank you.
Aaron, you wanna cover that outage we had the other night?
Yeah, so we had, power outage on the Ridgewood area. We lost our Ridgewood substation. Our guys came in, checked everything out on our side and had no indication of a fault on our side of stuff. It turned out to be a mechanical failure of some sort out at the Minnesota Power substation. We transferred the load to our 10th Street sub for now, and I have not gotten an update from MP yet as to when they will have repairs completed. I reached out to them today and they were gonna check into it, but I haven't heard back, so. Hoping they get their stuff repaired soon, because I'd like to have that other sub available.
Evidently.
as soon as
That
possible.
whole substation he's talking about is on 53, right there across from RMS and stuff. That's Minnesota Power. That controls, more or less feeds the entire northeastern Minnesota. And when there was a fire the other night, I was thinking, boy, this could be catastrophic, and it didn't turn out that way. They had the power back in an hour and a half, so that was good. Any other questions for the staff?
Nope.
None? Your motion to adjourn?
I'll do it.
Support?
Sure.
Okay. All those in favor say aye.
Aye.
Motion carries unanimously. Meeting is adjourned.